Good evening, everyone. We will just start the call shortly, waiting for everyone to join in. Just give us a couple of minutes, please. Good evening, everyone. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations for Infollion Research Services Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first half of the financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is probably to educate and bring awareness about the company's fundamental business and half-year financial under review. Now, let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Gaurav Gunjal, Managing Director, Mr. Varun Khandelwal, VP Research, Mr. Abhay Sangal, VP Operations, Mr. Abhishek Jha, CFO, and Ms. Madhumita Praname, CS and Compliance Officer. Without any delay, I request Mr. Gaurav Gunjal to start with his opening remarks. Thank you, and over to you, sir.
Thanks a lot for the introduction, Purvangi. So a very warm welcome to everyone joining us today for our earnings conference call to discuss the performance of first half of FY25. So before we get into the details, a quick recap, and especially in the interest of those participants who are joining us today who are still unfamiliar with the business, a quick overview. So we are a almost 15-year-old company. We are a marketplace for experts. We operate as a platform for connecting clients with skilled professionals, whom we call as experts. So our services could be independent consultations, micro consultations, contingent hiring, and temporary workforce management. So we leverage our proprietary technical framework and market research capabilities to connect or provide a platform to grant on-demand access to our clients, on-demand access of our experts to our clients. So these clients are typically management consulting firms, private equity funds, hedge funds, and large corporations. So we deliver such expert assistance to through a meticulously vetted network of almost 90,000 experts, on an average posting an experience of almost 20-25 years. So I'll start with what happened in the first half of this financial year, as well as a quick recap of FY24. So in FY24, we had gone IPO. We focused mostly on stabilizing the company, setting up a foundation for the growth which was yet to come. So we focused on the recruitment front. We took a slow and steady approach, expanded at a pace which was very comfortable, but much faster than previous years. So we spent a fair amount of time training our team for middle management as well as at the entry level, making sure that the next generation of leaders are getting ready. And of course, we spent a fair amount of time. In fact, most of the management bandwidths was spent on stabilizing the tech, increasing the tech part, and making it far more robust and ready at the global level. So, as I said, in the last FI, our focus was on strengthening the foundation. This year, we shifted our focus to more of an expansion stage. So, we're primarily US. So, in our objects, we had said that we would be expanding into US, and we set up a subsidiary this in the first half this year. In this context, we also have some announcements. So, primarily three announcements. So, Abhay Sangal, who was taking care of operations at Infollion earlier, he has been appointed as country head US. Parina Kalra, who was promoted to AVP operations again a few months ago, she'll be stepping into shoes of Abhay for the India operations. So we also have one more service line which we are trying to expand into. Varun Khandelwal, who was earlier taking care of research, will also be taking care of all new initiatives under the brand name Uxa in the corporate L&D domain. So besides this, a quick outlook of FY25, we have, as I said, we are experimenting with newer offerings from the existing demand supply ecosystem. We would be leveraging our own tech, our own experts to explore and experiment with adjacencies. From a geographic perspective, we are taking steps to establish a 24/7 operations for cross-border projects, especially in MENA, SEA, ANZ and of course US, where we have a separate team now. So we plan to increase our market share within the client categories where we have started making some inroads as well. Hopefully, some numbers would start getting reflected through in the next financial year. And we are very sure that we would not like to leave any blind spots within our existing clients. We have been extremely focused on the numbers and KPIs to make sure that any gaps or if we are able to identify any gaps in our organic growth, we should be able to plug them immediately. So that's broadly it from my side. I will now request Abhishek to give you a brief on the financials.
Yeah, thanks, Gaurav. Uh, Good evening to all the participants. We had a strong performance in the first half of the financial year 2024 and 25, where we reported a significant growth across all the parameters. For the first half, revenue from operations went up by 40% to 35 crores. EBITDA was at 7 crores with a growth of 33%, and EBITDA margin was more than 20%. Net profit was almost 6 crores with a growth of over 40%, and the PAT margins were almost 17%. Precise figures are given in the financial statements, which is available with the company's website and also filed with the NSE. So thank you. And now I think we can move to the Q&A session.
Thank you. We'll now begin the Q&A session. If you have any questions, please raise the hand icon at the bottom of the Zoom window. You can also type your question in the chat box, and we will ask the question on your behalf to the management. In order to allow maximum participation, I request each individual to restrict your questions to only two per person, please. Mr. Shubham, please go ahead. Mr. Shubham, yeah, please go ahead, sir.
Yeah, hi. Am I audible?
Yes, sir.
Yeah, hi, Gaurav sir and team. Congratulations for a superb half yearly that you have reported. So my first question is there any attrition rate among the experts that we have witnessed in this half year? My understanding is that on average around 10% of the experts generate majority of our revenues, right? So how are we ensuring that these 10% experts are remaining active for us? Also, are there any avenues that we're exploring to monetize these 10% experts more?
Let me take this question. So these 10% are not a absolute absolutely identified number. So it changes year on year. So on an average, we end up using 10% because we not all the experts have are not recently on the panel. So there is the term attrition of experts is not a very valid term here because uh, they always have the option to opt in or opt out of the project. So even if they are registered, they would not like to deregister. It is just that over a period of time, when their knowledge becomes a little stale, they tend to fizzle out, or if there aren't any projects or deals in that particular domain, they tend to fizzle out. So they don't get attrited in the sense that they leave the platform. They are always available if required. Now, second question was, are we doing anything to leverage those 10%? As I said again, so they are not fixed 10%. They may change over a period of time, and that percentage would slowly go down because as the base increases, we are adding more and more experts. So yes, so we of course we have been trying to leverage the same experts for more projects, more geographies, and also more offerings.
So, understood, sir. Also, another question was, what would be the average ticket size this yearly for our calls in India as well as in the US?
I think that has been disclosed. That has been disclosed in the number. It should be broadly the same as last year.
Understood. Okay. Thank you.
Thank you. Mr. Shikhar Mundra. Mr. Shikhar Mundra, please go ahead.
Am I audible?
Yes, sir.
Yeah. Hi. Congrats on a good set of numbers. So wanted a clarity. If I see your cash flow statements, I see a 84 lakh investment in the US subsidiary. But if I see the funds of IPO utilized, I see around 4 crores have been spent in expansion of service line in US and Western Europe. So just to get a sense of it, like how much of it have we expensed out and how much of it has we capitalized for the investments in US?
I think Abhishek, would you like to take that? I'll just give you a quick overview. So this includes the team which works in US hours in India as well. That is also attributed to that, and the subsidiary which is the front end in US where we would be where we have recently set up operations. So Abhishek, would you like to add something to it?
Yeah, so the 85 lakhs that you see in the subsidiary investment, that is capitalized, and them are under the revenue, under the expenses.
Okay, so the
So,
majority, okay,
yeah,
so only 84 lakhs is capitalized. So rest
yes,
of the 4 crores, around 3 crores, 15 lakhs is expensed out. That's
yes, correct. Yes,
all right. And
around
are we,
85 lakhs is yet to be expensed.
right, so are we generating any revenues as of now from US?
So cross-border revenue is being generated from experts in US, which you can find in the payment section.
Okay.
In our last AGM, we have in the last annual report, you would find a section where we have disclosed how much payments are being done to experts outside India. A significant part of it is in US. Have we generated a lot of business from clients in US? No, that is yet to begin.
Okay, okay. And this increase in employee benefit expense from 6 to 8 crore has been due to hiring of additional employees for the US subsidiary?
Right.
A lot of it. We have been expanding our Indian subsidiary as well, US as well, and new initiatives as well. In fact, we have expanded a tech team. So we have, in general, expanded the team.
Right, right. And the
So
amount is
I request you to come back in the question queue, please.
sure, sure, sure. Thank you.
Thank you. Mr. Swaraj, you can go next, please.
Hello, you can hear me? Hello?
Yes, sir, you can go ahead, please.
Hello?
Mr. Swaraj, you're audible. You can take the question now.
Hello.
Yes, Mr. Swaraj, you're audible. Please go ahead. We'll take the next question from Mr. Akshay.
Thank you for opportunity. Congratulations for good set of numbers, Gaurav sir and team. Sir, my first question is, what is the split of revenue between corporates, consulting firm and investment firm in this half year? And how do we see it shaping up in the future?
Thank you, Akshay, for this. It's broadly the same split as last year. Directionally, the percentage of financial investors is likely to be higher at the end of this financial year. We don't have the numbers ready as of now. We haven't disclosed, but directionally, I can say that at the end of this financial year, we should be seeing more representations from financial investors.
Okay. And sir, in your annual report, in your communication, you mentioned that this year we are focusing more on building a solid foundation rather than expanding, but we are likely to change the gear. And
Right. So that annual report was FY24, and now we've kind of changed the gears, and we are more in the expansion mode right now. So we in the second quarter of first or second quarter of last financial year, which is FY24, we did the IPO. So the first thing we did was we recruited a lot of people, trained a lot of people, set up the tech, set up the subsidiaries, and now we are actually trying to implement everything what we've done last year.
okay, so new growth will come from one US and second new initiatives that you are doing.
Yes. Besides the market share expansion and a new set of clients, there are three set of primarily 3 or 4 set of growth areas which we are targeting.
Okay.
The non-organic growth is likely to come from these two, either US or new initiatives or both.
Thank you so much.
Thank you. Mr. Rohit Balakrishnan, please go ahead.
Yeah, hi Gaurav and hi everybody. Congrats on a very good performance. Gaurav, just 2 questions actually. So one, in terms of, so you said you're spending about 3 crores and a bit in setting up your US subsidiary and expanding that team. So I mean, not this half year or next half year, but just from your perspective. So how are you seeing that? I mean, you said you're not generating any revenue, which is fine, but just to understand from your perspective, how are things shaping up and what, I mean, just if you can just spend a bit more time because that's a huge market. So if you can just spend a bit more time explaining where we are, how things are shaped up, are you confident now that the scale up will happen? If not in this year, but maybe like wherever you see. So just if you can spend a bit time there.
Yes. Hi, Rohit. So thank you so much for the kind words. So US, no, so generating revenue from the US subsidiary from US clients is a separate problem. Generating revenue from US experts is a separate problem. We have been doing very well on the US experts bit, where we have been building up our US network and utilizing it for Indian clients who are seeking expert calls in US, which you can see in the annual report. There is a very sizable increase in the number of calls which we have been doing from US experts. So the team is actually doing that.
Right.
So the team which works in India in US hours is doing that. For the US subsidiary is primarily the front end work, which we will start shortly. So that is something which we do not have too much visibility. From India to outside calls, which primarily US, we have a fair amount of visibility, which we have written in the AGM or the annual report.
Right. And that you see continue to sort of scale up.
Yes. So we see that is going to, anyways, it's a very significant trend over the last few years. Even over the last year, we have seen an increase, and it is likely to continue that we would start seeing more and more payments to international experts. Although the revenue would be recognized in India, but that is being, the US team is actually working for Indian clients as well who are seeking US experts.
So just as a follow-up to this, in terms of then, I mean, for you to, once you have, and correct me if I'm wrong on this, but once you have an engaged pool of experts on the supply side, then would it make it easier for you to then actually go out and generate revenue in the US as well? I mean, but
Exactly the point, right? So if we go too prematurely to US and start doing sales and we cannot service them because we do not have experts, we will end up wasting money. So in any kind of a marketplace, both sides go hand in hand. So now we have concentrated our experts in a couple of sectors where we are not very happy with the size of the panel, but we are okay to at least kickstart our sales effort so that by the end of 1 year, 2 year, we have substantial expert size over there. So that's the reason we have now started doing sales in US while we have been building the network for the last 1.5 years.
right, right. And just two small questions. One on the organic growth in India. So how are you seeing? I mean, obviously, fantastic performance in H1, but do you see this sustaining? Because we keep hearing some murmurs around bench being very high in consulting companies and growth not being as strong as what one reads in the general headlines. So, I mean, if you can just maybe talk on that, and also some words around the corporate learning part, if you can share.
Sure. So corporate learning, anyways, VK will share in detail, but I'll pick up the first part. See, organically, yes, we have also heard consulting may or may not do well, but my sense is that they have de-accelerated, not degrowing. So they were accelerating at 40-50%. They're probably growing at 20-30% in terms of recruitments, maybe not in terms of revenue. So maybe they were expecting a lot of growth, and that's why they recruited a lot of people. And they might have slowed down the recruitments, which means they've slowed down the growth rate, not the growth. So that's my understanding. Having said that, we would like to take a slightly long-term view here that uh, even if it is a bit low or high in the next coming quarters or a few halves, it doesn't matter. Overall, the trajectory at an Indian level for organic growth, we are looking from a long-term perspective, and it stays firmly intact. As long as the country is growing, the corporate earnings are growing. I see no reason for consulting companies to not grow. Obviously, they'll not grow in a straight line. There will be peaks and troughs, but directionally, I don't see a problem.
But essentially, got it, got it. You don't see any major hiccups, at least in the near term for you.
To be honest, I'm not the best person for it, right? Maybe the consultants would be
No, from
best
your
placed
point
for
of
that.
view, I mean, whatever
From
you're
our
seeing.
perspective, we haven't seen too much of a change. As
Sure.
of now, it may or may not,
Of
but
course.
as of now, we haven't seen too much of a change. In fact, not a change at all. Not even too much is the right.
Great. And on the corporate learning side,
Yes, so
can
we
share.
will have a we will give a quick brief whenever there is a relevant question. So VK is prepared for that.
So, I mean, maybe I can ask that question. I mean, I just wanted to, I mean, so in terms of
Okay, then VK, go ahead. So we were kind of prepared on something on new initiatives. VK will give you a quick brief.
Absolutely. Rohit, you want to lead with a question? Should I just go ahead and
yeah,
share?
why don't you go ahead? Why don't you go ahead?
Awesome.
That will be
Awesome.
better.
So as you all know, right, we've been working on this corporate L&D initiative under the brand name Hooksa. Our primary target here is corporates, Indian businesses, second, third family run businesses, mid-tier corporates, top-tier corporates, and so on. What we're essentially trying to do is leverage the gold mine that we have, the extremely high precision, expertise of our experts. So we're leveraging that and delivering L&D programs, knowledge sharing sessions for our clients. We've been making a few waves around. We've kind of expanded in terms of geography and team and everything. What our focus right now is on making very deep domain high precision learning interventions, or as we like to call it, modules. So learning modules is something that we are trying to make. We're coming up with very high precision, high tech modules around different industries and sectors. Each module you can think of as a 90-minute to 2 hours kind of a session delivered by an industry expert, the SME. So think of it a typical a 3-day course might consist of about 6 to 8 modules in terms of learning, right? Likewise, a succession planning course for about 3 months for a third generation family business could involve a series of modules, including domestic and international site visits, which again qualify as modules. So that's how we're trying to build a repository of learning assets and modules. A typical module, if you think of, would would cost similar to a 1 hour consultation for our clients. Our target right now is to curate the first 1,000 about modules, of our own in-house, and then of course we'll open it up to our experts to contribute modules. So we're gonna also source a lot of learning content from our experts. Obviously, it'll be vetted, screened, and in partnership with our instructional designers that we have in-house. So yeah, we've made about a few modules so far, around 100 or so. We built a team of 5 members, including LMS administrator and instructional designers, a couple of client servicing guys. We're putting a lot of focus around getting the fundamentals and the infrastructure right for this service line. And of course, down the line, how we look at it is our clients should be able to mix and match modules and experts to suit their objective. So they will not be, I mean, they'll have complete flexibility to learn and pick up and choose what they really want to learn, where they want the right interventions, and then of course design their own learning journeys. That's how we are planning to do. Right now we're in the, like we call, the CE phase, and we were also gradually doing a bit of GE. So CE is custom empanelments, working on inbound client requests for all the L&D requests that we get. And of course, parallelly, our instructional designers are also working with our experts to general empanel kind of, in that parlance, create modules of our own that we will offer to our clients. So that's a bit of update on Huxa from my end.
Got it. No, this is very, very useful, Varun. Any sector specific or functions? How are you sort of cutting that?
Not really.
Okay.
In terms of our own outreach, we're focusing on the top 4 sectors for us, which is auto, manufacturing, BFSI, and pharma. But our sales team doesn't really stop there. So we've got
Sure.
leads from a lot of other sectors, including media and IT and a lot of stuff. So yeah, we were working with a lot of clients. Mostly we're sector agnostic, and of course we cover all functions. We're not restricted there because we leverage our existing pool of experts around it. So
Got it. No, this sounds very interesting. So probably I'll catch up in the coming months and
oh,
learn more.
absolutely.
Thank you so much. Thank you so much, and all the best, guys. Thanks.
Thank you. Mr. Bhavesh Gupta, please go ahead.
Hello. Yeah, am I audible?
Yes, sir, you are.
Hi, Gaurav. First of all, congratulations on such outstanding set of results. So I'd already put this question on chat, and some part of it is already answered. So in the November con call, we had discussed that around 80% of our revenue is concentrated to top 5 consulting companies, and with and we had discussed that we would be increasing our focus to buy and sell side funds, including Ps and VCs, because a lot of the international players like GLG, ThirdBridge are concentrated there. So have we had some success in that regard? Have we been able to onboard some of these players in the last 1 year? And now, how does our top 5, how much revenue is coming from our top 5 to 10 clients as opposed to 80% from last year?
So thanks, Bhavesh. Thanks for the kind words. So I am not too sure about the 80% for prime clients number. I think it was slightly different, which was disclosed. Not slightly, it was different, which was disclosed last year. I think it was 80. So Abhishek, can you remind me 10 clients, some percentage which was disclosed? So I'll not confirm this number. Second, as I said, directionally, yes, we have onboarded a few private equity clients. Which were not there with us earlier. In general, we have also onboarded a few public market clients as well, but they are fairly small as of now. The overall contribution is fairly small, but hopefully once we have got a toehold, it is likely to expand in the coming few years. As I said, directionally, we're expecting a larger contribution by these clients down the line. As of now, we haven't seen a material change, like at least in the historical number. But directionally, we have onboarded, so we should be getting some better numbers over the next few years.
Got it. Got it. Thanks a lot.
Thank you. Mr. Tanay, please go ahead.
Hi, Gaurav and team. Congratulations on a stunning set of numbers. Just had a question around how are you dealing with competition from local firms like Vedak? So I know, for example, Bain prefers to use Vedak because they're cost effective, I think more cheaper than you guys. So I know you've said that your USP is ops, which is connecting the most highest level of expert with the requirement of the client. But how do you deal with new competitors coming in who are trying to price lower?
Interesting question. I'm not completely sure that we are not preferred by a lot of our clients. First things first, I like to correct that we don't necessarily connect to the highest or the senior most expert. We try to connect with the best possible expert at the best price. So if it is not required, we may or may not suggest, but that's what we try. On the pricing bit, to be honest, I think overall the market is not very price sensitive. I'm not saying that it will not be, it will be immaterial whether we offer at, you know, $400 versus $500. It might matter when it is 400 and 800, but it may not matter too much between 400 and 500. Having said that, our gross margins are firmly under control. Not even an inch has changed, and we try our best to get the gross margins even lower. So we believe that the gross margins where we are is a sustainable long-term gross margin, and if people can offer at a very cheap price, I'm not sure that will be a long-lasting one. If they can, great. We will try to, get even more efficiencies to bring down our gross margins. But the amount of money which needs to be paid to similar experts remains the same. That is the input which kind of remains the same as long as you are focusing on quality. So to summarize, I believe it is the price is important, but it is not overtly price sensitive. I think this is more of value for money, yes, but price cannot be the only choosing criteria for experts. Second, we believe that the gross margins where we have are very, very efficient and competent, and we try not to increase it. In fact, we try everything that's possible to bring it down and by improving efficiencies at our end.
Understood, Gaurav. Thanks. I just had a suggestion.
Yes, please.
What I've observed is that some of the competitors like Insight Alpha, etc., are quite proactive in terms of reaching out to potential clients, consultants at consulting firms, saying they share profiles at a much faster rate on WhatsApp. They engage, they ask, do you have any requirements, and so on. So do you have some sort of model of relationship managers loosely, who are
Yes,
constantly in
we do
touch?
have that. We do have that. The thing is, most of our a lot of clients actually discourage usage of outside platform thing. In fact, a lot of our compliance teams from the clients strongly discourage usage of WhatsApp. So while we do it once in a while, but we tend to be fairly strict on compliance bit from that perspective. And yes, we do reach out to our clients. There is a dedicated account manager for every reasonable size.
Understood. And can I ask one more question, small one?
Yes, of course.
Which is, while let's say you have an expert onboarded and you have a particular rate which you're planning to charge the client, the client could go back to a competitor saying that, why don't you onboard this expert at whatever your rates or so on quickly, and try to sort of get it done from another competitor. So is there anything in place that we can do to avoid such sort of poaching, so to say, of our experts? Because I've heard that this is quite common.
Yes, I've also heard that. I would not say this is quite common. As a percentage, I think it should not be material enough. It happens, but as I said, this market is more time sensitive than price sensitive. If the expert is available, that it is vetted. Uh, I've seen most of the clients being respectable to the network who brings them first. Does this happen? Of course, it does happen. We've seen it umpteen number of times. Uh, but the expert tends to charge similar amounts. So
Understood.
only if it is actually actively being shared by the clients, it can happen. But as I said, if we maintain our gross margins, for one or two cases it may happen, but in the long run, it should not happen too much.
Got it. Thanks, Gaurav, for the very detailed responses.
Thank you.
Thank you. Mr. Lakshmi Narayan, please go ahead.
Yeah, thank you. A couple of questions. Am I audible, Gaurav?
Yes, hi, Len. Go ahead.
Hey, Gaurav. First, see, if I just look at your, other income, I think it's close to 0.99 crores. Am I right? And you had a cash balance of close to, I think, 31 crores or so. So just want to understand. I mean, if I just look at the other income, it appears to be very low. Just want to understand, is there a possibility for us to generate higher returns in our treasury?
I think Abhishek should be a bit. This 0.99 is for, from what I understand, for this half, right?
Yeah, is from the liquid investments and FDs and all.
Yeah,
So
no,
we
when I
haven't really
just
gone
look at it,
aggressive.
so I think
We haven't really gone aggressive on that. We are actually, we intend to use that money for expansions, including inorganic expansions. So as of now, I think it is all liquid and maybe a bit of arbitrage. But from that perspective, it seems to be a reasonable
yeah,
return.
because if I just look at it for a half year, it's around 2.8. If I just assume the starting, we had around 31 crores in our balance sheet. And if I just look at it, it appears to be too low. And maybe just an observation. Maybe I'll go to the next question. Just want to understand what is your repeat business. And I say repeat business from the same clients who had given you business for the last year. Usually, how does it work? Is it more than 95% is repeat business from the same clients? I just want to understand the mix of new client and old clients revenues.
So I think our top five clients, the short answer is that repeat business is very high. We depend a lot on our old clients, and hopefully it is the same from a client perspective as well. And I'm not sure of the exact number, but it's a very significant number in terms of clients which
Will
are
will it be
who
upwards
have
of
been with
90,
us.
95% or so?
I am so Abhishek, if you can share the precise number, it will be great. But if you don't have it handy, we'll come back to you. For now, we can say that I think this year may not be close to this, but amongst the largest clients, I think all of them have been with us for 5 years and more.
Are you growing deeper in your clients? Is that if you let me
Our
put it
clients
this
are growing, and we are trying to go deeper as well in terms of market share, both.
Got it. So when you started this year, in terms of your own strategy, budget, etc., and where we are now, what has positively surprised you and what has not surprised you positively?
Well, to be honest, there hasn't been too many surprises. We've been fairly on track from what we thought we will be at the end of uh, uh, first half, and definitely nothing negative, to be honest, as of now. On the positive side, again, we have seen some very good responses from our experts towards our new offerings. So that's something which so we actually just tapped a very small sliver of our experts for making courses, and we literally got overwhelmed with the response. So that kind of made us double down on the corporate training business. That's the only thing. Besides that, it's pretty much on track. There are no surprises on either side.
And what do you do to ensure you have a higher predictability of your revenues? Is there a way in which when you look at it, when you budget for the next 6 months or a year, how do you look at predictability of your business and how you internally allocate resources for that?
That's a very tough question, to be honest. So how do I see at a macro level is that as long as the corporate earnings grow, we see consulting firms, especially strategy consulting firms and management consulting firm as a consequence of that. And we believe
Let
that
me
a certain percentage.
sorry, let me ask it in a different way, right? So when you look at a typical services firm, there is always an order book kind of a mindset, saying that look, this is the base load of work that is given, and on top of it, there are other things would come. So in your business, how do you solve for that base load? Or is it like a typical, I mean, you will not have visibility for the next month. I mean, and you serve as you get the business. So
If you're saying, are there any long-term contracts? Then no. If that's what you mean by base load, we do not have long-term contracts with most of our consulting clients. There are a few financial clients who do sign up annual contracts, but we're not very strong over there. We've been working on it, and hopefully we should be able to get there. But again, in terms of visibility, that what will be the actual usage, what we have observed is that it typically depends on working days, right? It goes down a little towards, uh, December, Diwali, Holi, holidays, and maybe early part of Jan. As long as they're working days, as long as the country is working, we typically get projects. But in terms of if the base load means long-term projects, then we don't have visibility. But what we have seen is that there is broadly a similar uh, sort of organically growing projects over the last few years.
got it.
So
And
just
one,
extrapolating the previous numbers is the best predictability.
And in terms of
Sorry,
number of
sir,
employees,
I'll request you to please come back in the queue.
yeah, okay, I'll come back in.
Thank you so much. Mr. Vignesh, you can go ahead now.
Hello, am I audible?
Yes,
Yes,
sir.
Vignesh, please go ahead.
Hi, thank you for the opportunity. So my first question is more on again, on the part of the cash and cash equivalents that we have around 35 crores. And I assume we raised around 18 crores last year, 2023, right? So wanted to understand how much of that 18 crores have been actually utilized. If I'm not wrong, 6-7 crores were allocated for the US project in mind. So, and also wanted to know going ahead how this 35 crores are going to be utilized, what part on inorganic and what part on organic, some figures would do, if you could help us understand.
So Abhishek, would you like to take the first part?
Yeah, so out of that 18 crores, we have already utilized almost 14.5 crores, and 3.75 crores are to be utilized in the next 6 or 9 months. So this was the first part, and the second part will be answered by Gaurav.
Okay. So I am not very sure I completely understood the second question, but I think from a inorganic or organic perspective, we would be open. As of now, we haven't planned anything concrete, but we're gradually opening up, especially now that we have more visibility on what kind of businesses we would like to grow into. And the base stabilization is done. We have recruited and we have been training. We've kind of grown in terms of team as well. So we would be open to something inorganic. Although, to be honest, it's not sizable enough, but we have been scouting a bit now.
Okay, the idea to understand was anything out of the 35 crores has been earmarked for, organic growth. I mean, if something more on the lines of if I can understand how much we have already spent on Uxa and what is the plan, how much we are planning to spend it in this year and next year.
Okay.
So just to understand how the
So we have in the objects we have disclosed a private expert panel. We didn't have a separate brand name Huxa at that point of time. So it was an umbrella term which we used for long-term projects, for any research-oriented workshops, trainings, etc., etc. So we came up with the brand name Huxa very recently. But at a PEX panel as a whole, I think we have deployed about a couple of crores. We have built up the team. We have got some tech stuff. So Abhishek would be able to give you the precise numbers. Have we earmarked? No, we haven't earmarked or segregated as of now. That is still something which is under the planning phase, that whether we would like to build or buy specifically in international markets.
Okay, just one last question from my side. When you said that the idea is to curate around 1,000 modules of our own, so what would the cost be like behind creating such a module which is more like, I mean, not easily, it's not easy to create such modules that are
No, we would
very
be creating that with the help of our experts. To be honest, as of now, we are also in the learning phase. We haven't made too many. So we are still in the learning phase. As of now, we are delivering projects which are coming from our clients, getting into a module shape and hoping to reuse them later. I think I should be in a better position to answer this question next year. As of now, I don't really have too much visibility into how much is it likely to cost.
sure. Yeah. Thank you. Thank you for the clarity and all the best, sir.
Thank you so much, Vignesh.
Mr. Akhil, please go ahead.
Hello, am I audible now?
Yes,
Yes.
Akhil, please go ahead.
Yeah. Hi, Mr. Gaurav and team. So I just wanted to understand what is your go-to-market strategy for the US, because the US being a mature market, there are already larger players who exist there, who have a much bigger export network, you could say, who already have relationships developed. So what is going to be our strategy there? What is going to be our pitch to the clients? Like, why would they come and give us their business as opposed to the other larger players?
Very valid question. So I've outlined my overall strategy in my previous calls as well, but I'll, for the sake of everyone who has just joined, I'll repeat it. So it is broadly 3 or 4 steps. Step one is we will like to set up the network at a GE phase, which we have been doing it for a year or so now. We would also like to focus our efforts from outbound India clients. So India clients, US experts is where we will use the CE bit to, or the custom empanelments to really bring down our cost of expanding the panel. That's what we have been trying. That's step one. Whenever we get a projects across domains, we try to concentrate our bets on 2 or 3 domains whenever we are supposed to do custom empanelments. So that has been the toehold of sorts for us. We have been building our network in tech and life sciences. Within tech and life sciences, there are certain specific sectors where we are trying to focus on, so that we can generate quicker business from those 2 sectors. So these are the 2 sectors which where cross-border stuff really works in India and US. So that's what we have been trying. I believe that once you get to 5,000 experts in a particular domain, in a particular geography, is where you get a steady state number. So we'll get to know whether that number is really valid for US, or is it a higher number which is required. But as of now, our target is to focus on 2 or 3 domains and then identify teams, partners within those domains and establish ourselves within those domains as opposed to going at a much horizontal level. So the second or the third step is we have a much lower cost base in terms of getting new experts. And since we are in the expansion mode, we can probably allocate more resources, custom empanelments for any US clients. So for US competitors, doing custom empanelments is a very expensive affair, right? Especially if they are based in US completely. Plus, since we are in the setting up phase of US, we would try and go deeper into the custom empanelments and spend more time and money over there. So these are the 2 or 3 supply side toeholds we are looking out for. From the demand side, we mostly have, or if not already, we have converted most of our contracts to a global level, and we are hoping that we would be able, and since most of our clients are global in nature, so we are trying to do some farming and extract projects or hope for projects from those clients as well. So that has been our broad go-to-market strategy. Plus a few flips, a few very we've observed that a lot of Indian consultants, especially, move to US for their higher studies, and that is a kind of again a toehold for us. Since they've used us in India, we get some better responses from their new US clients. So these 2-3 points I would like to, mention on the US bit.
No, thank you, Gaurav. That was really helpful. It helps us get a sense of what you're trying to do in the US. Something I'm still not able to understand is what are you doing right that you're growing 40-50% year on year? Because clearly the consulting industry is not growing so fast. Like it may be growing, but it's not growing 40-50%. So is it just that the whole industry is at an inflection point right now where more and more people have started to use these export services and the whole industry is growing at 30% and you're gaining market share? That's why it's probably 40%, or what are you doing that is so right?
Well, to be honest, I think the industry is not really growing that much. We might be gaining market share. That's my understanding. One thing is that we have been very consistent on our gross margins. We try not to increase the prices no matter what. Maybe that's working out. We are very precise in terms of experts or so what we have observed that as compared to rest of our peers, we have been much better in terms of per person calls, which means our team has managed to generate far more calls from the same set of experts and clients by virtue of being more domain and research focused, is what I would like to believe. Plus, there has been some tailwinds for us. Uh, Maybe some of our peers who were funded during the 2021 era are not doing so well. They were maybe we got some tailwind from our expansion into US. So, but touchwood, we've been growing at 30 to 50% on average, 35-40% for the last 6-7 years now.
That's it from my side. Thank you so much, and best of luck going ahead.
Thank you so much.
Mr. Swaraj Mehta, please go ahead. Mr. Swaraj?
Hi, am I audible?
Yes, sir.
Yeah. Hello everyone. Congratulations on a great set of numbers. I just had 2 questions. One question was, what is the revenue split between the domestic experts and the foreign experts? And my second question was, and if it's and how are they billed? And my second question is, how much of our sales are derived from online channels and through the sales team?
Okay, so I'll take the second question first. That's relatively easier. Online means, so we are a B2B company, right? So it is not an automated platform for now. It's a curated one where we go sign up a client, and only then they are able to send us experts and do those calls, online or offline. It doesn't matter, right? So whether they're using our platform or whether they are using emails, it's in some cases some calls happen on our value chain tools as well. But mostly it is a B2B platform. There is always a contract before. Not any individual cannot just go sign up on the platform and start using calls. That doesn't work like that. Second, what is the revenue split of domestic experts and foreign experts? I think Abhishek
Yeah.
might give you a better number. We have
So the
disclosed these
revenue,
numbers in detail in
yeah.
the last annual report as well.
So the revenue split, we can't say, but the revenue generated from the international experts in those 6 months was around 27% of the total revenue.
Okay. And but like how are they built? Like Indian foreign experts working for Indian companies, are they counted in that, or like how does it work? Like how
Yes.
was it?
So basically how we recognize is that any client, if they bill in INR, it is counted as an Indian client, whether they're talking to an Indian client or an Indian or a Indian expert or a US expert or outside. Any payment, whether it's dollars, it's counted as an international expert, which will be visible in the international payment section.
Okay, got it. Thank you. All the best.
Thank you.
Thank you. Ms. Poonam, please go ahead. Ms. Poonam?
Hello.
Yes, please go ahead.
Sorry, yeah, Mr. Poonam, please go ahead.
Hello, am I audible?
Yes,
Yes,
sir.
you're audible. Please go ahead.
Yeah, sorry, I think I joined from some other link, so it's saying Poonam. My name is Mahesh Atal. I'm from Atal Investment Advisors. So it's okay. I would actually love if you can move to a audio-based platform for this con call next time. That's okay. So basically, Gaurav, my question would be more on the, how many US experts have we added in this last, say, half year or so? And that would be my first query. Second query would be like, what do you see with coming to, see, what have we done is like we have grown our revenues by 34%. And the EBITDA also has grown with the same parameter. So what is that has increased in the cost? Because you being in consulting business, I would hope that with the increasing revenues, our EBITDA should be increasing much more ahead of our revenues. So what has actually grown up in the cost side? If you can please, I was
Mostly during the expansion phase, we have been adding a lot of clients. We've been adding a lot of team in our US, which has been in a US business, which is working overnight. So we've increased that. We've added a tech team as well. We've added a team for new initiatives as well. That is the primary increase in our cost base. The other question, I think this answers your question.
US experts, how many experts you have added?
US experts, I think Abhishek, we just gave the precise number, right?
Yeah, so as on 30th September, it was almost 6,300 US experts.
So when you say that we could actually get in the last, just to the last guy, you are answering that after touching 5,000 plus, you'll get a sense of, that how exactly it will pan out and all. So
5,000 in a domain.
In a domain.
As of now, 6,000 are across US. So it is practically a sprinkle, even if you divide over like 50.
Also, Gaurav,
whatever.
just wanted to understand that is this, do you see a general thing that, IT and ITES, does it form a major of your thing? How exactly would you break up into industry-wide thing?
In experts,
And
so
let's say my
roughly
revenue today is, let's say you have done 35 crores.
Yeah, I get the question. Roughly 4 segments give us about 60% of the business. The 4 segments are consumer, life sciences, BFSI, and tech.
And where do you see that the small parts and bits? Do you see any green
Everywhere
shoots
else,
there?
chemicals, manufacturing, lots of them. But these four are give us 60%, and there is a long tail as well. It's not like it suddenly drops after four and they are equal. It also depends upon which market is doing well.
Also,
It is not a fixed number. It is a slightly dynamic number or dynamic breakup or distribution.
okay, Gaurav. Gaurav, I just had this small query that what I have heard is that the competition, what do they do is that they have these tie-ups with the visa houses, where they just kind of suppose there is some country which does not give you visa. There are some challenges faced by some of the corporates to get the visa of those countries. So they generally don't tend to go there and or get the experts from their location to India. So are we in touch with those visa houses or maybe in some agency or something where we get that data from them and then we help them to reach out? Is that kind of arrangement works
We
out?
haven't explored that. We haven't explored that, but that's a good idea. We'll have a look at it.
Because I have just heard that someone is doing that. So just wanted to know any revenues from that side, that angle are flowing.
No, not at all. I mean, we haven't explored that market yet. But now that you have suggested, we'll have a look.
Gaurav, one more thing is that with a business like us, we are a tech platform, right? B2B, but a tech platform. So do you really think, because last time also when I asked you this thing, you were like, let's see, you said that let's see, let the quarter plan out. So I would be again asking you the same query that being a tech platform, do we really see this 40% growth? Because I would feel that we could grow much beyond that because we already have a base of experts. So where do you think this growth can be, like 40% only for the next quarters or so, or you think that this growth will outpace itself like over the quarters?
No, so we are happy with the growth, to be honest. Most of our incremental growth is likely to come from, not most, but we are hoping that exponential growth will come from new initiatives in US, but organic growth we expect to come from India as well. Is
So
it a purely tech platform? But it also depends upon how many experts we have and how much can India absorb at that price point. So it's not entirely under our control.
So the incremental growth will come at the cost of incremental cost also. You'll have to incur more costs going forward, or this cost will be like, because I could see that the employee costs have gone up by 50%. So
No, but employee cost has primarily gone up for newer initiatives in US. In India, it is likely to be a slow and steady growth in employees.
no, what I'm saying is
Mostly servicing and
what I'm saying is like next phase of growth, the incremental growth, will it have its own incremental costs, or it will be like stagnant on the cost side?
see, if we limit ourselves to the existing set of experts and existing set of clients, then it may not the cost may not increase, right? But if we are expanding and we are getting more experts, more and more geographies, and we're also expanding the sales team, we are also expanding or trying to get newer clients, then obviously the cost will increase.
Okay, all right, Gaurav. That would be
Is the incremental cost of servicing the same expert to the same client or to some extent new inbound client is pretty much
just
negligible.
wanted to know whether there will be some addition to the margins or not. That's my more, I mean. All right. Thank you, Gaurav. Good day.
I think I had explained it in one of the videos. How do the margins work and how do we aim for these kind of margins by making sure that we are empaneling more and more experts while maintaining the margins. I had explained it in a video.
All right. Thanks for that. Thanks for your time. Thank you.
Mr. Ragam, would you like to go ahead and ask question? I think he's on mute or something. We can go ahead with Mr. Pratik. Would you like to ask some questions to the management?
Am I audible?
Yes, Mr. Pratik. Go ahead.
Yeah, thanks for the opportunity. So my quick question was, in terms of the experts, where do you see the attraction, in terms of the sectors that are being majorly used upon? And the second part of that would be, are you seeing any adjacencies in terms of new sectors being requested for which you do not have experts and you plan to invest into those?
So I think I already answered the sectors bit. Yes, so whenever there are new sectors coming up, we do start getting queries, and that's where we spend some time and money on doing custom empanelments. Are there at a broad level, these sectors are still hot, and but the kind of experts we empanel and the kind of queries we service are far more granular. So we always we maintain a steady 85-15 kind of a ratio. 85% of our calls are done by experts already on board, and we try to make sure that 15-20% of experts are empaneled new whenever we get newer domains.
Queries. And what would be the time gap between a request being made and experts being empaneled?
Depends on the domain. It could be as low as a few 15-20 minutes if we already have the expert on board. If it is a very popular domain or the request is wide enough, then probably a day. But if the request is really niche and you have to look out for expert, it could take days and sometimes weeks as well.
Okay, got it. And one last
But
question.
more often than not, if it's max 3 days.
Fair enough. Okay.
Mr. Prateek, I'm sorry to interrupt, but as we're running out of time, I request the other participants to also take the question, please.
Okay, thank you.
Thank you so much. Mr. Karthi, please go ahead with your question. Mr. Karthi? We can take the next question from Mr. Sanyam, please.
I'm audible?
Yes.
Please go ahead.
Yeah, so Gaurav, congratulations on the beautiful numbers. And my first question is that what is the share of government bodies and institutions, both in India and abroad? Is there any share of government bodies in the in the revenue? And if not, are we planning to add or cater to the government sector or the allied sector, like the government bodies and institutions, which are also one of the customers, which are are increasingly taking help of these platforms? So, are we having any plans for that? My first question is that, yeah.
Well, as of now, we don't have, and we might explore at some point of time. But as of now, there is a lot of low-hanging fruit which we would like to tap into first before we move on to the government bodies.
Okay. My next question is that, like, since you said that it's been 15 years that we have made this company, we started as a startup, and now we are sitting on 60 odd crores as the trailing 12-month revenue. What could be the next trajectory, since we have, now we have created some base, as you told, and we are also putting money on the new initiatives. In the next 3 to 5 years, how you see the top line growing and uh, going ahead about the volume and the price, because you said that your motive is that you are not increasing the margins. So is that if we increase the margin in the coming times, our sales might get dipped, or we are comfortable of getting a price increase in the coming years? So a position of like 3 to 5 years, how are you seeing things going ahead?
So I'm not. I think growth is going to be a leading question. I would not answer that. But on the margins bit, so when I say I'm not increasing the gross margin, doesn't mean overall margins may or may not increase. We are highly focused on making sure we are more efficient. So if the margin increases come from efficiency, we are happy. But if the margin only comes from charging more to the client, then we are not. So having said that, over a period of time, inflationary ticket size increases are likely to happen in India. But for US global numbers or global numbers, specifically US, the ticket sizes are obviously going to be larger. And the gross margin for the call payment to the expert payment is something which we are focused on. But overall, for everything else, we never said that we are not going to work on margins. So as long as we are in the expansion phase, the margins might be depressed. But if we want to, we can stop doing, or we can withhold ourselves from doing more custom empanelments to increase our margins. But as of now, and in the coming few years, we see ourselves in the expansion phase.
Okay. Thank you so much, Gaurav. Thank you.
Thank you. I now request Mr. Gaurav to give his closing remarks, please.
No, so we have a few questions on the chat box, and there are some more. Would you like to take that if we have time? Let me just quickly go through all of them. I think we have answered most of them. So, okay. So then, thank you so much, Purvangi. So that should be then. Thank you so much. Thank you so much for you all for participating in the earnings conference call. So I hope we were able to answer your questions satisfactorily and offer some insights into our business. So if you have further questions or you would like to know more about the company, please reach out to the team at Valorum Advisors. So they've been very efficient in hosting this call as well as all other initiatives of ours. And as a closing remark from a company strategy perspective, I think this year we would be this financial year we would be moving ahead from our relatively conservative phase of last year, where we were more focused on stabilizing, setting up the foundation. This year would be more about experimentation and taking new initiatives, and hopefully some inorganic growth as well. So that
Thank you,
brings us to the
Gaurav,
end
sir.
of. Go ahead.
Thank
Over
you.
to you,
Thank
Purvangi.
you, the entire Infollion team. And I thank all participants for coming today and taking part in the earnings call. Thank you, everyone.